what we would like to do afterwards is to also invite a few of you from the audience to also give your perspectives, so that we have a more kind of interactive discussion, and it's not just people from the stage speaking. So please, afterwards, give your reflections, and if you have any questions, feel free to let us know. So let me start with Matthias, if that's okay with you. Could you tell us a little bit about what has been the experience of your institution in circular economy investments in Africa?
Yes, I think I don't want to repeat much what I presented yesterday. I could make a lot of presentation, but I want to bring it in the current context. So just to summarize, you saw yesterday we put a lot. We have put a lot in circular economy. I think it's to the tune of, I would say, more than 200 million euro in the last couple of years, possibly even 300 million, to promote the transition from linear to circular economy. And of course, you saw also policy-wise, we are much stronger now as a European Union to promote circular economy in Europe and internationally. Now the context now, which is, we live in a very fast-changing world, I would say, where we live in a world which we might not like, where multilateralism is being undermined, where climate action is being undermined, where more nationalism prevails, and of course, where wars happen. We are involved basically, or have to support some countries in fighting a war, which is against the UN Charter, and maybe there will be money needed to rebuild countries after the war. So the finance space is shrinking, I would say. And it's very difficult to justify to get more money, so that's a new reality. And let's keep in mind the US is off, basically. So the European Union will certainly not be able to compensate what the EU doesn't, what the United States doesn't pay anymore. So that's a context which is really putting ourselves in a different context and position. And yet, this world is on fire, not only because of wars, but because of climate change. And we just learned last week that one tipping point seems to have been reached. Also, we talk about the coral reefs, and of course, Johan Rockström on the planetary boundaries. So we are at dangerous terrain, and this will not be the first one which will be surpassed, basically. Meaning, it's beyond our control to correct it. So there is a strong call to go from linear to circular. Money is not enough, so we have to think, where does the money come from? And if the transition from a linear to circular economy makes sense economically, and I think it does, for everybody, then I think we also have to look at homegrown resources in our countries. That's where coalition of ministers of finance for climate action comes in. There's also a coalition of ministers of trade which comes in. So we have to make trade more sustainable, we have to make economies more sustainable, and we here with African Circular Economy Facility and also through our support, there are more and more, let's say, green growth strategies being developed, circular economy strategies in different countries. And now the question is, okay, who finances it? And I think we have to get a little bit away from always looking at the donor. It's almost like a reflex. If it makes sense to create, if the future jobs are more circular, green, digital, then of course the ministers of finance of each and every country have to put some money there. The ministers of economy have to put some money there. Some ministers are called Minister of Economy and Climate Action. So that's also very important, and I think I leave it for the time being at that. So we have to look also into domestic resource mobilization, because it makes sense. It does not make sense to continue investing in a fossil-based economy. Yes, if you want to become rich very quickly, fine. If you want to make more people poor and accelerate climate change and environmental degradation, no. So it's a no-go normally to do that. You can, but you will have the effects even, it will hit all of us harder than we can imagine.
Thank you, Matthias, for highlighting a few of the challenges of the financing investment environment in which we currently find ourselves, but also giving ideas on that needs to redirect itself, and looking at other sources of financing and funding besides kind of more traditional development agencies and donors. So thank you, and I think maybe the African Development Bank can follow up on the same question and give your perspectives on that. That would be great. Thanks.
Sure, thank you. I think Matthias has put it really well about how the global agenda is really shifting, and I think as African countries, we have really seen that shift. When I think back to the United Nations Environment Assembly of 2024, at one of the side events that we held together with GACERA, the other program on circular economy, was about leveraging finance for a circular economy. And I can still remember the opening remarks that were made by the Minister of Environment for Morocco, Madam Leila Ben-Ali. She said at that time that we were facing the threat of unilateralism. It was the end of multilateralism, which was quite shocking when you think about the number of environmental challenges that we're continuing to face on a daily basis. And again, at AMCEN in July, just July 2025, she made the same mention about now we can no longer talk about, you're restricted from talking about climate finance, we need green finance. You have to talk about non-traditional sources of financing. It's not, you cannot start classifying and saying, oh, we need climate finance of this much. No, you have to look at, so this is what we have been, this is how we have been financing this, but we have to now look at non-traditional sources. It could be looking at insurance, it could be looking at guarantees. And when you think about that narrative, I mean, as African countries, we are seeing the shifts so strongly. So for the bank, for us, investing in green growth, investing in climate change, investing in circularity has always been part of our DNA, I'd say. We have had a green growth action plan for a number of years. From about 2008, we had our first green growth policy. We also had a climate risk and adaptation management policy from about 2012. And it was only in 2016 that we now concretized everything into one standalone climate change action plan. So that was our first climate change action plan as the bank. The realization then was that as the bank makes its investments in countries, that we were facing the impacts of climate change on our investments. When we'd have a road that we'd build, a few years into the project, you'd either find that the road has not been completed because the rains came and they stopped the construction, or you find that the road has been washed away. So slowly we were starting to see the impacts of climate change on our investments. Now green growth as well has been a core part of the work that we invest in, while not necessarily within the terms of recycling or circularity. There have been aspects of our work that have been about promoting green growth. And the way in which we do this is through integrating it into the sectors. So apart from investing in your normal road infrastructure, we also have a number of agriculture projects. And if you look at, for example, the agriculture sector, we've seen an evolution over the years of moving from traditional monoculture agriculture to more diversified agriculture, looking at value chains, looking at special agriculture processing zones. And in the processing zone, you're thinking about how are you recycling the waste, how are you recycling the water, how are you putting in place renewable energy. So you really see a shift in our portfolio in countries from a few years ago, where it was monoculture, to now diversified forms of agriculture. The same thing in, let's talk about the water sector, where before we would do a water treatment plant in the the normal traditional way. You have the pipes and the reservoir, but now we have countries that have thought about, so what can we do with regards to water treatment and recycling? What measures can we put in place to use the waste for energy? Those are the kinds of projects that we're seeing, and the evolution has been steady and it is continuing. But I think one of the main challenges that we see is that for many countries, investment in these activities is not the priority. a country requires a road versus sanitary landfill, the road takes priority. So often you find that these investments tend to be at the last choice in our portfolio. But it should not be the case, because we do know that the socioeconomic benefits of investing in some of these areas have wider repercussions. If you do a water treatment plant in a different way, you can end up with a new source of water, you can end up with a new source of fertilizer, you can end up with clean energy. So those are the ways in which we hope to see this shift, this transition amongst the African countries that are here. And what does this mean? Because in the last 2 years, we have been financing the circular economy roadmaps. So the roadmaps in the 4 countries that have received support. Ideally, the roadmap is a document that should not just sit on its own. The roadmap should be sitting with the Ministry of Finance, your ministries of national planning. They should be aware of what is in the roadmap. And in the next budget cycle, they should be looking at how are we going to finance this, what aspects of this can we finance, what can we take to the international markets for financing, what can we take to the carbon markets. Those are the discussions that need to start happening. The roadmaps cannot be allowed to sit by themselves. So for us as the bank, that's a journey that we hope to walk along with you. Our usual entry point is through the Ministry of Finance. That is where we start our engagement as the bank in every country. And we have a country program officer and a country manager who is responsible for that relationship. And then as the climate officers, we come on board and we offer, identify certain opportunities that may be relevant to the country. And for me, this is where I see the greatest strength. That as you go away from this meeting with a new knowledge or lessons on circular economy, that knowledge is shared when you engage with the Ministry of Finance. That as you do your 3-year to 5-year planning, as you do your new NDC as well, which we commend the countries that have done that you're able to then translate what is learned here into something actionable. Thank you.
Thank you, Margaret. Very interesting, and I think what I'm taking away from this is that you have been really seeing a shift in your investment portfolio, focusing more on green growth, on climate and on circularity, but also integrating circularity more into your sectoral investment portfolio. But that there's a real opportunity for countries themselves to prioritize the circularity when they propose proposals to the bank, and making sure that those are aligned with the circular economy roadmaps and plans in the NDCs. I hope I'm summarizing that okay. So thank you so much. Over to Natasha. So for you, the same question. I know that for Paige, it's a little bit of a different perspective, so it will be interesting to hear from you on that. Thank you.
Yes. Thanks a lot, Hilda. So again, I am now speaking on behalf of the UN Page. These are the 5 UN agencies that has been driving or has been behind the Partnership for Action on Green Economy. Our agencies, our 5 agencies, UNEP, ILO, UNIDO, and UNDP, as well as the overall UN system. Of course, I influenced a lot by these big shifts and changes in the international development finance landscape that Matthias mentioned. Of course, we are extremely grateful to this very generous contribution of our partners of the European Union. It hasn't been only generous, it was also very responsible, strategic, and guiding. But we do understand that we need to adapt and to change. So over the past years within Page, within our family, there are lots of discussions on what shall we do next, how we shall adapt. And these discussions has been extended to our steering committee with our funding partners, all our donors. So we will be adapting changes to be able to still provide meaningful service to our partner countries. Now, Page is not a funding agency like the development bank. We are not a development bank, we are not an investor, we are not an investing agency. What we do, or what Page does, is policies to shift finance and investments towards just fair and circular economic transformation. So we do this through policies. Page supporting governments with economic policy analysis, knowledge, capacity building, to enable them to better manage this tightening fiscal space in a climate and nature positive manner. Applying financing instruments like sustainable budget approach, like climate budget taking, like budget transparency frameworks, like fiscal instruments, and other related policies. So we do this focusing on the finance and investment flows that could be influenced by the government, and we help governments to start influencing this financing flow, to align, leverage, and better manage those financing flows towards the circular transition. We do this, of course, with our multiple global partners. I referred yesterday to our strategic partnership with the Coalition of Finance Ministers for Climate Action. Last year, we had a big gathering of the coalition members from the Africa region in Uganda. 20 ministers of finance got together. We spoke about the innovative financing frameworks. We spoke about how to bridge or how to help collaborate between ministers of finance and ministers of environment. And we feel that this is one of our strategic frameworks to really drive further the PAGE action. Now, just to give you a couple of examples of, again, what PAGE has been doing and what I think we can learn from PAGE results. How the sustainable finance ecosystem could be developed. And I will be focusing on the work that's done in this region. In Burkina Faso, for example, we worked with the government to propose new environmental tax as part of the green economy strategy. In Ghana, PAGE with the UNEP leadership conducted a comprehensive assessment of the fiscal policy instruments and framework that informed then a number of policy developments and investment frameworks. In Senegal, at the moment, we are working on ecological transition plan and will be formulating related governance mechanisms for green investment. PAGE has been working in other countries with Kazakhstan, Indonesia, for example, on the blue finance frameworks, on roadmaps and finance plans for the circular economy roadmaps that you have mentioned. All of this is the effort to enhance investment readiness of the countries where we are working. But I have to admit that what PAGE is doing with the government policy level still will not bring countries, will not make countries 100% investment ready. There is still an intermediate step that is required to come up with the pipelines of mature bankable proposals. This work, I have to admit, is being supported a lot by development banks, by vertical funds, by Green Climate Fund, and countries need to be able to navigate through these financial landscapes. Very importantly, and again very much linked to what we discussed about this changing financial space, even in the best geopolitical situation, things cannot be changed. We can't shift the needle on circularity with only public finance. We need to tap into the private. We need to reorient the private investment flows towards the circular paradigm. And again, PAGE has been doing that through government policies. In Kazakhstan, for example, we launched the public procurement legislation. We're working in Kyrgyzstan on green financing framework that help create incentives for public-private partnerships and public investments. We work on emission trading schemes, national emission trading schemes in Kazakhstan and Uzbekistan, and many other tools. We have been, I have to admit, working a little bit less on this in this region, and I think this have to be fixed. Finally, catalyzing investment, mobilizing new investment. Some of the PAGE results, and there is evidence, has been helping countries to leverage scaled investment. For example, in Mauritius, in the very early stage of PAGE, we supported tracking tools for public sector environmental expenditures, green fiscal policy scoping, and today this informed the GF-funded large net zero nature positive accelerator program that is implemented in Mauritius. In Morocco, PAGE supported feasibility study on green hydrogen for the steel sector which provided foundation for the green climate finance. In Kyrgyz Republic, similarly, the work that Page has been doing on green policy development resulted in the State Development Bank investment of several $1 million, and now it's catalyzing investment from the Green Climate Fund. And we are trying to really nurture this type of seeds or experiences of Page. Very successful and actually very targeted work on leveraging investment, working with banking and investment sector has been done in Mongolia. This is probably where some of your countries might want to learn from, and there have been several exchanges with Mongolia, with other countries. Mongolian Sustainability Finance Initiative, focusing on green banking, has been launched in a very early phase, almost 10 years ago, and it's still being pursued by the national banking sector. Mongolian Green Finance Corporation was initiated, catalyzed by Page, now supported by the Green Climate Fund. Mongolia Sustainable Finance Forum, again launched by Page 10 years ago, still being owned with multiple financing investment partners. So there are examples of this positive investment leveraging, finance leveraging work coming out from the policy and finance tools that governments can develop with their partners and learn from. Thank you so much.
Thank you, Natasha. So to quickly summarize, which is very hard, but what I was getting from the examples that you shared is that Page supports a lot of kind of economic policy assessments and helps to kind of influence financial flows and helping countries build kind of the sustainable finance environments in different ways. So you named like quite a few examples of how this was done in different countries. One of the things that you highlighted, which remains a challenge, is to have a more ready list of bankable projects that could be proposed to finance institutions or private finance for funding. Thank you so much, very interesting. Over to you, Peggy. Can you hear us?
Yes, thank you.
And for you,
can you hear me? Yes?
Yes, go ahead.
Okay. So yes, what we've heard from other colleagues is the importance of to diversify sources of financing, and of course, in this perspective, mobilizing private finance is a high priority, and that's what we work towards at UNEP Finance Initiative, UNEP-FI. And so maybe just a few words to present UNEP-FI. So it's a partnership between UNEP and the finance sector. We work with more than 500 members, 500 finance institutions globally, which represent more than $170 trillion assets. And we collaborate with them, and we partner with them to really provide guidance to advance market practice towards more sustainability. And in the region, so in Africa and Middle East, we have over 50 members, including approximately 38 banks, 16 insurers, and we work in the region. Our work in the region focuses on sharing industry best practice, building capacity on sustainability issues amongst financial institutions. We also work in delivering tools, resources to support members in the implementation of sustainability frameworks. And we also focus on engagement with various stakeholders in the sustainable finance space, including regulators, in particular central banks, as well as banking and insurance associations, local sustainability networks, and policy makers. So what we see from our work is that commitment and collective efforts matter. And that's what was identified in a recently published report by MSCI, which showed that 61% of the signatories of the Principle for Responsible Banking framework, which is the UNEP-FI framework, so 61% of the signatories lead their industry in managing financially material sustainability risks and opportunities. 61% compared to 24% within non-signatories of the Principle for Responsible Banking. And that based on their MSCI ESG rating. So a significant impact of commitment and collective efforts. Also meaningful impact shown on a topic which is highly relevant in the region, which is SME financing. So PRB signatories show that SME lending by PRB signatories has grown significantly and has grown nearly twice as fast year on year compared to within PRB signatories compared to non-PRB signatories. So also a very meaningful impact on this topic, also meaningful impacts in terms of financial innovation. And we see, for instance, that 90% of PRB signatories offer sustainability-related financial products, compared with only 44% of non-signatories. And so that's generally speaking on why commitment and collective efforts, even if voluntary, really matters. Then when we look at circular economy financing more specifically, what we hear from our members is that they still face the same well-known barriers of general lack of awareness on the circular economy, on the benefits and financing opportunities related to the circular economy in the region. They face the lack of integration between different stakeholders, which is so much needed. We've already heard it from other speakers. And the lack of data and metrics to measure circularity. And that is something which comes up a lot in what we hear from our members. We see more and more examples of good practice in the region. And my colleague Natasha was mentioning the example of Mauritius and what has been done at national level. So we also have, for instance, examples of good practice in this country with one of our members, which has developed a preferential sustainability linked loan to one of its clients to support an innovative project aimed at recycling waste from chicken slaughtering, in this case, to produce valuable byproducts used in pet food production. And so what was interesting in this example that you can find as a case study in one of our publications that I'm going to comment a bit in further details, is that the bank really engaged proactively with its client to design this product. The bank conducted an eligibility assessment based on an internal screening methodology that they put in place, their internal green taxonomy, which does include a circular economy segment, in order to ensure that the project meets certain screening criteria, green criteria, circularity criteria. And so on this basis, and on the basis of a better understanding of the business of its client, the bank designed a tailored financial solution and also measured the impact in terms of reduction in greenhouse gas emissions and other sustainability topics. So we also see other examples of innovative solutions across the continent, for instance, to support water reuse, water use efficiency in the agri-sector. All this is very promising, but it's still unfortunately considered as a niche topic. So circular economy financing is still considered as a niche topic. And I just wanted to share with you today the outcome of a recent UNDP survey with its members. So its members across regions. And so when asking to our members on what themes they would need support in the next 18 months, pollution and circular economy came out at global level only as number 4, behind climate change, behind social issues, behind nature. But interestingly enough, Africa is the region in which the percentage of, or the ranking of pollution and circular economy was the highest compared to other regions. And so pollution and circular economy ranked number 1, so as priority number 1, on which they will need support in the next 18 months. For 4% of them at global level, and almost 10% in Africa. So 10% in Africa versus 4% globally. And it was ranked number 2 by almost 30% of our members in the region, to be compared to 22% only at global level. So we see quite strong interest in the region. But what is important, and I'll stop there, I'll stop with this, is to not to help our members and to help financing institutions to consider this topic of circular economy financing not as yet another topic, but really as a topic which needs to be mainstream and to be integrated in their sustainability strategies and action plans, and as helping them to deliver on their climate targets, on their nature targets, their social targets. And this is the approach that we have been taking in a series of guidance that we launched last year, which is called Circular Economy as an Enabler for Responsible Banking, and which is a series of guidance, very practical guidance for banks on how they can incorporate circular approaches in their action plans for climate. We started with climate. And this at sector agnostic level, but also in certain high impact sectors. And so we started with buildings and construction, with textiles, and we are about to launch also a sectoral guidance on agri-food system and on metals and mining in the course of October. And so in this guidance, we help banks to identify what kind of action they can take across their internal policies and processes, their client engagement, their portfolio offer and financing offer, and their stakeholder engagement and partnerships to really embed circularity. And so after having started with climate, we are now opening a new cycle of work in which we are going to explore the nexus between circular economy and nature. In 2026, we also plan to work on the nexus between circular economy and healthy and inclusive economies. And as for the guidance that we have developed on climate, now that we have this guidance, we now also contemplate to pilot them, and maybe we can speak about that a bit in further details later on, but really to pilot the guidance in select sectors, select countries, to fine-tune them and to better help our members to implement that. Maybe I stop there for now.
Thank you, Peggy. Thank you. So what I really liked, you said many great things, but what I really liked, and I saw Margaret not sitting next to me, was the making sure not to always look at circularity as yet another theme that needs to be addressed, but making sure it's well integrated into any other projects or sectors and national policies and NDCs to make sure that it's well reflected. And I think you also highlighted that by the priorities of for financing, you were saying that there was for certain regions more interest to invest in climate mitigation rather than in circularity. But I think for all of us in the room, these things are so connected you almost can't see them separate anymore, right? So but it was nice to see that there was a lot of interest in circularity. The other thing that what I also retained was where you were saying that there was a lot of good impact when banks were kind of voluntary signatories to sustainable financing and sustainable banking principles, and that you saw better investment for SMEs and more responsible financing. So I think that was also great. So what I would like to do now, because I know that if you give us the microphone, we will talk too long, and I would love for some people from the audience to share your thoughts on some of the things that have been said here. Maybe share the challenges you have in your country in terms of financing, or the opportunities you've seen or experiences, or alternatively, if you have a specific question for a panel member, I think this would also be a really good time to ask. So, would there be any questions? Would anybody? Okay, let me pass the mic. And please, for Peggy, introduce yourself.
Ok, merci bien. Je suis Addis, responsable du dossier économie circulaire au ministère du cadre de vie. J'ai écouté religieusement les interventions des membres du panel et je voudrais vous remercier très sincèrement pour ce qui a été fait, pour tout ce que vous faites pour accompagner les pays, les petits pays comme le nôtre. Et ma question va s'adresser à Monsieur Mathias, si je me rappelle, c'est lui, Monsieur Mathias, et qui parlait des efforts de l'Union européenne. C'est vrai que l'Union européenne accompagne les pays, mais depuis que cet accompagnement a commencé, est-ce qu'il y a une évaluation pour voir un peu, est-ce qu'il n'y a pas encore des points faibles que l'accompagnement n'a pas encore touché? Et je vais dire par exemple, au niveau du secteur privé, on constate souvent qu'il y a des petites initiatives, des initiatives d'adaptation, d'atténuation, mais qui n'ont souvent pas de financement. Bon, au niveau de l'État, c'est vrai que on n'a pas beaucoup de moyens, mais c'est plus compliqué que les initiatives, les financements aillent au niveau des petits producteurs, de ces ONG-là. Est-ce que dans le pipeline de l'Union européenne, est-ce qu'il y a des mesures qui sont prises, est-ce qu'il y a des dispositions qui sont en cours quand même pour accompagner ces petits producteurs-là, ces petits ONG qui travaillent quand même au niveau de ce secteur de l'économie circulaire, qui font beaucoup, mais qui souffrent aujourd'hui de financement? Si en temps vous avez fait déjà une évaluation, est-ce qu'il y a des défis, est-ce qu'il y a des choses encore à faire pour accompagner nos pays? C'est ce que je voudrais dire. Merci bien.
Thank you. Would you like me to quickly translate them? Okay. So another question.
It's just a comment, mine, and probably a general question. My name is Molu from Kenya, the Ministry of Environment, Climate Change and Forestry. I am in charge of policy on waste management and pollution control. On a light touch, when I looked at the program, I was expecting come here, there is this amount of dollars, this. So, but then, on the contrary, it's a green picture of, dwindling finance. The area we are talking about not getting attention, especially climate change, getting resistance in terms of financing. But then, it got me reflect that climate change is caused by pollution in the first place. So can we tweak this now that some people are allergic to climate financing, and often it looks like free money, but then when you tweak in terms of controlling pollution, be it green gas emissions, be it other forms of pollution, solid waste, we link it to now this circularity. Probably we need to tweak this and get financing from for this area, from institutions to businesses, private sector, from Africa Development Bank, from EU, all these institutions. Why don't we tweak it that way so that then we
with this, issue of dwindling climate finance. Thank you.
It's what many of us were thinking in the room, that sometimes it seems gloomy, but we need to look for solutions and we need to take action on how to address this differently.
Merci. Je suis Dr Didier Pochot de la Côte d'Ivoire. Je voudrais remercier les intervenants sur cette préoccupation majeure qui est le financement. Mais ce que j'ai retenu dans tout ce qui a été dit, l'État est revenu à plusieurs reprises. L'État. On confie ce secteur à l'État, le financement. En Afrique, il faut que nous soyons clairs. L'État, quand on parle de l'État, le gouvernement, est très souvent confondu aux politiques. C'est-à-dire celui qui vient au pouvoir met en œuvre sa vision. Et dans sa vision, il peut ne pas y avoir ces secteurs. Alors, quand on oriente le financement vers l'État, beaucoup de choses peuvent ne pas être faites correctement. C'est pourquoi je suis d'accord avec mon frère du Bénin qui est intervenu en faisant allusion aux initiatives. Les initiatives d'économie circulaire existent, mais le véritable problème pour les booster, c'est le financement. Je me rappelle bien, quand nous, en Côte d'Ivoire, nous avons élaboré notre stratégie des emplois verts qui prend en compte l'économie circulaire, nous avons parcouru des organisations internationales de financement et on nous a orientés vers l'État. On dit non, on accorde des financements à l'État, donc c'est à l'État de vous octroyer des financements. Mais si moi je suis au pouvoir et que mon programme c'est construire des ponts, construire des écoles, et que je ne vois pas l'économie circulaire dans ce contexte-là, et vous ne voyez pas que le volet économie circulaire, quand même que ça soit intégré dans des grands projets, sera biaisé. Alors dans ces conditions-là, ne trouvez-vous pas judicieux de financer directement les porteurs d'initiatives en économie circulaire que de confier tout à l'État qui peut confondre mon programme de société et financer un secteur clé comme l'économie circulaire pour réduire l'empreinte écologique. Merci.
Moi c'est Zengue Kamou, je viens de Burkina Faso. Ma question donc est relative donc à PEJ. C'est que PEJ nous a accompagnés à élaborer la stratégie nationale de l'économie verte au Burkina Faso, plus d'autres initiatives. Je sais qu'autour de 2022 ou bien c'est 2023, PEJ a fermé ses portes. Voilà, je voudrais comprendre, est-ce qu'il y a des possibilités que PEJ revienne au Burkina Faso pour soutenir d'autres initiatives en lien avec l'économie circulaire. Merci.
Okay, yes. Morocco last, and then we'll have 10 minutes to answer questions and do like a last tiny brief statement.
Thank you very much. I know time is of the essence, so I'll try to be brief. First of all, I would like to thank the panelists for their insights, and I would like to refer to what Margaret said at the beginning of her intervention. Our Minister, Madame Leila Ben-Ali, emphasized many times the need for, let's say, reinvention multilateralism. And I would also say that in the annual meeting of the World Bank and the IMF that was held in Marrakesh in 2023, there was it underscored the need for a new financial architecture, let's say, in order to serve better the global south. And in light of recent developments, I don't know how we are going to do that, especially that the United States now is off the table. And the need for finance is only growing year after year. That's my first comment. Second comment, I would say, in Morocco, we have very tight coordination between the Ministry of Sustainable Development and the Ministry of Economy and Finance. At the level of the Ministry of Economy and Finance, they have created a dedicated special climate unit in order to mainstream all climate requirements or provisions in the triennial budgeting. So it's planning of the public budget for 3 years, and now it mainstreams all climate related, let's say, projects and priorities of Morocco. Secondly, we also have developed a national sustainable finance strategy, which was a coordinated effort from the central bank, Bank al-Maghrib, and the financial sector, with the contribution of insurance, banks, and also the Ministry of Economy and Finance. That's for the reflections. I only have one question. As it was said by my colleagues, the circumstances in Africa are very different from, let's say, other parts of the world. Priorities sometimes are not aligned with circular economy or climate change. Other priorities arise, let's say, like infrastructure development, health, education, water, sanitation. And also, let's not forget the CBDR principle, which is the common but differentiated responsibility principle. The historic responsibility of Africa in terms of climate change, for instance, is very small. And even today, Africa contributes, I don't know if I'm right, but no more than 4% of global GHG emissions. So we definitely rely on external funding. But we also know that public funding should be in this equation, and we are trying to do our best effort, but it's not enough. Public funding can do it alone, donors can do it alone, multilateral funds can do it alone. So in light of all this, I would like to ask a question, open question to all the panelists. Do you see potential in maybe developing a continental blended finance mechanism? We are in a circular economy gathering, so maybe that mechanism can be directed towards circular economy investments for the initiatives, the many initiatives we have in our continent. We can see here in the exhibition, youth are very empowered. They are the generation of tomorrow. They have a lot of big ideas, but financing is always a big challenge. So I would like to know the reflections of the panelists about this suggestion. Thank you.
Thank you. First of all, thank you so much for your commitment and very interesting questions and reflections. So my chief is sitting over there, and I think he gave me 10 more minutes. Joel, 10 more minutes? Okay, so if, I know that's very challenging, so maybe I'll give each of you 3 minutes to try to answer the questions that have been posed and maybe build on each other's answers if you can. Thank you.
Since we have 10 more minutes, we have 15 in total. I think a lot of questions are directed to us. I take 5 minutes. No, and we can continue during the break. Let me start with Benin on access to finance for startups, SMEs, and circular economy. We do exactly that. Yesterday I presented the Switch to Circular Economy in East and Southern Africa program. It has a matching grant facility exactly for that. What we need, and you heard it from both speakers, and of course I didn't say that, but financial instruments are the next steps, and if you want to grow, you might also take a loan, a credit, and that's where the financial instruments come in. And we, as the EU, would work with EIB, with AFDB, and so on, KfW, all the banks, and our contribution would be grant contribution for guarantees, first loss guarantees, risk sharing, and so on. So we do that, but once again, ODA is just not enough. And government funding, by the way, also not. But the private sector is important, and that's not only the banks. And I come now to some of the other questions, Kenya, and also from the back from Cote d'Ivoire. Cote d'Ivoire. So the banks are important, but again, not only the development banks. Now look at many African cities here in Addis. We have good examples. The biggest tower here in the town is from the commercial bank. So Abyssinia Bank builds another tower of 349 meters high altitude. In Cote d'Ivoire you have towers everywhere. In Europe, in New York, the biggest skyscrapers in China, wherever, are banks. So if we have a matching grant facility funded by the European Union, and I talked once to the Ethiopia Development Bank president about that, shouldn't banks also take more risks in their hands? Shouldn't you cut from your tower, make 20 floors less, and put it in a risk-sharing facility to encourage to invest in small and medium enterprises and startups, and some of them might succeed. We had that with Google, we had that with Apple, and so on. If nobody would have invested in it, they would have failed. Let's do that in green and circular economy as well. And the banks really need to hear this call, and I think you can amplify that as African Development Bank and EIB and whatever. Development banks is not the only thing, but the local banks, the national banks, they have money. They have plenty of money, and they are in the discussion with your financial system, even the local interest rates. It's totally crazy. You know, if you tell somebody in Europe, you take a loan and you pay 25% interest, people say, no, I never take a loan. People would start sweating. And from the EU side, you have this support. You mentioned also in, there's a new financial system in Marrakesh. It started. We hear the calls from President Ruto. We had the Paris summit on that, and recently in Sevilla. So the EU is certainly supporting that. But it's not easy, because if you want to change the financial system, you have to ask the guys who contribute to the World Bank, the biggest. You're back to the US, and IMF is of course another story. So certainly we try to support that, but I think it's a longer process. But I hear you. Maybe last point on historic responsibility, because this call comes always to the so-called global north. When you look at climate finance, the EU is by far the biggest climate financier. But we are just wondering, where does historic responsibility start? Let's say the Industrial Revolution started 150 years ago. We didn't know, nobody knew that it contributes to climate change. But it was pollution. Pollution was the issue. And only since 1986, there is when Professor Jim Hansen briefed the American Congress that climate change is man-made. Also here they had indications, because they compared the Mauna Loa, Hawaii time series with CO2 emissions. Then we know. And I think that's when the historic responsibility starts. You said now Africa 4% current global emissions, greenhouse gas emissions. You know, combined with the EU 27 member states, it's 10. So Africa and EU 27 contribute currently to 10% CO2 emissions globally, 10%. Now look at what happened last 20, 30 years. That's also history, because at the beginning of the Industrial Revolution, the emissions were quite low, and with globalization in the 90s, it massively went up. There is not a single European member state which belongs to the top 10 of global emitters. It's the others. It's Russia, it's China, it's Saudi Arabia, it's Brazil, it's India. So we have to get a little bit away from that. We take our responsibility, but history starts even yesterday. If we know better what we should do now, we should do it. We should do it. But instead, again, we are in this very strange world where suddenly we hear again, drill baby, drill. We just last week a contract was signed here in Ethiopia to start oil exploration in Ethiopia, in a country which is 98% on hydropower, has 13 months of sunshine, if you know the tourism slogan. Is it needed? Do we need that? And we agree at the same time in Dubai to transition away from oil, but we invest again in oil. So, and the last thing on finance, what we didn't talk about, we have very good experience in Europe on the carbon pricing. We should mention carbon pricing also. Yeah, carbon markets is one thing, but carbon pricing. You know, we through our emission trading scheme, which took some years, more than 10 years to really work. But now it's basically a system where you have certain emission permits for heavily energy intensive industries. And these emission permits, they get less and less and less, meaning the price goes higher up. So as a regulator, we force our industries to change, and it works. It works now, and they do change because they don't want to pay the additional penalties to buy permits somewhere else, which are very expensive. China copies it since long time. US, some California, let's say, not the entire US, but there is some replication of that. In Africa, it's a very rudimentary discussion, but we had it at COP28 in Dubai. Was it 28? Yes. And also just recently in Addis at the Africa Climate Summit, we had also called for a high-level event where President Ruto was supposed to participate, our vice president, to talk about carbon pricing and carbon markets. This generates money which you can invest in renewable, in circular economy as well. So there's a lot to be done, I think, and yeah, it's a journey, but it's a journey where we feel some heat on our back, yeah, and I think it will not get worse. We really have to move, and that's where governments come in, regulate a little bit more, encourage, put incentives for changing, for transitioning, award it, and the most important one is governments, and I stop private sector, banks, private companies. You know, we, unfortunately, the environment, social governance frameworks, even this is at the moment a little bit shaky, yeah, because it's again all about myself, it's about profit, it's about, you know, it's about the next day. It's not about, and I'm not talking to the European Union at the moment, yeah, but what I see on the planet, the messages we get in the news from leaders, wow, you just wonder, and that's not sustainable. We have to go back to invest in the planet, in people, and in profits, triple bottom line of shared profit, of impact investments, sustainable investments. But at the time, we have to move a little bit away from that. So this group, others, we have to try to find ways to amplify, to get back to this and to underline the need, including to ministers of economy, ministers of finance, that's the right way. These are the future jobs to be created, and you cannot invest in stranded assets, which, by the way, you might not get a proper insurance if you invest in that. That's another thing. Good. I hope I answered questions directly to you.
Thank you, Matthias. So we of course are over our 10 minutes. That's my fault, so I'm taking the blame for that. So I'll ask Natasha, I think there was a page-specific question from Burkina, so 2 minutes, then I'll give Peggy 2 minutes, and then African Development Bank will do a wrap-up. Thank you.
Thanks a lot. Maybe I can split my two minutes into to address two questions. So first of all, colleagues from Burkina Faso, thank you very, very much for acknowledging the work of PAGE in your country. Because of the reasons that Matthias actually outlined, and these are very objective reasons related to geopolitics and the current global financial landscape, PAGE will not be able to return to Burkina Faso in the same shape as we used to work with you, right, with a large allocation and long-term work plan. What we are trying to do in PAGE now is kind of recalibrate ourselves and try to support countries through our regional global work streams, by supporting peer-to-peer learning, South-South exchanges, events for the countries to be able to learn directly and to meet the peers. If the situation is changing and if there are more resources that PAGE can mobilize, because clearly, I mean, we all see that there is still a demand, especially in this region, we of course will be opening up again our country support instrument. But at the moment, we are trying to still continue some level of engagement with the countries and support. But I also would like to try to answer to a colleague from Benin on the locally led initiatives and how we can finance NGOs and grassroots organizations that require financing for their work. I should probably take off my page hat and speak on behalf of now UNDP, because I've been working on access to climate finance a lot. Two things I would like to mention for you. Indeed, it's very difficult for large MDBs, investment banks, investors, to reach out this grassroots level because of the very high transaction cost. So it is important for the countries to have infrastructure that could receive large allocations funds and distribute it, allocated to the local level, to the grassroots. UNDP for a long time has been such a partner, helping governments to deliver financing addressing circular economy, climate adaptation, climate change, nature projects at the local level as an aggregator and as a partner that is present across all countries. But there are also specific financing institutions that are actually built for that. I would like to mention Adaptation Fund, for example, that is focusing specifically on support at the grassroots locally led initiatives, and they have opened new windows on locally led adaptation, on innovation grants that are specifically tailored, and countries are invited to request financing for such specifically tailored instruments that are targeting local communities, local NGOs, grassroots organizations. GEF has a similar small grants program that has been in operation for 20 years. So there are instruments available for this type of support, but it's important that countries build inside the infrastructure for direct access to those funds. Thanks.
Thank you, Natasha. Peggy, 1 minute.
Yes. So a lot has already been said. I could not agree more that ODA will not be enough, public money will not be enough, and the public actors and private actors have really complementary roles to play, and especially what will be key is to find collectively efficient ways to attract private finance, and for that, circular economy activities need to be economically sound and financially viable to attract capital. And in this perspective, it's probably a double approach, which is key to have. I would say a top-down approach where the policy actors fully play their role in creating the enabling environment, in creating, nurturing a market for circular products and services, because it's with strong and predictable demand for circular products and services that will help to create the economic stability that investors need to feel comfortable enough to then invest. So creating and nurturing the market, so through public procurement, through fiscal incentives, through EPR mechanisms, and also through and also enhancing. Creating the returns which make sense economically and financially for private finance compared to the risks that they are taking. And so that also means using blended finance solutions much more to indeed invest, foster investment directly in businesses, but with a leverage mechanism. So that is I would say the top-down approach and creating the enabling environment to attract private finance, and then the bottom-up is also very important, because we take into account the local context. What are the sectors which are the most important in the local economy of a country, and then on the developing tangible, practical tools to support actors, financial institutions, industries to identify circular opportunities, to use the adequate KPIs, the adequate criteria. And so all this complementarity of roles, we are exploring it in a report that we are about to launch, which is called Unlocking Circular Economy Financing from Vision to Action, which really highlights this complementarity of roles. And maybe just to finish on that, so blended finance will be also a key lever of change, and what can be done to try and harmonize and create convergence in how to approach, how to define circular opportunities in high impact sectors. And we are also working in developing sectoral circular economy financing guidelines for MDBs and for private FIs, with the objective really to contribute to create a common language. So yeah, maybe I'll stop there. I hope it answered some of the questions.
Thank you, Peggy. And then last, Margaret. Thank you.
Thank you very much. So let me start with a comment on, or rather answer to the question that was made by Côte d'Ivoire on, I think that the number of unconnected or disconnected initiatives that are going on, many small initiatives. And I think this is, the challenge with an area in environmental management, circular economy. Often you find that the initiatives have to start small, usually as a pilot phase, before they can be then taken to a larger scale financing phase. And I think if we look at the businesses here, for example, this is a really good example. These are innovators. These are very early on phase, but they would need a bit of financing to take them next from proof of concept to actual growth. And I think this is what the Africa Circular Economy Facility has been trying to prove through the Afri-Circular Innovators Program. So we funded the 30 SMEs, and now we're going into the growth phase. But the same would apply to any circular economy initiative, I believe, that it's about taking them to the next level. So we hope that we can be able to support countries such as Côte d'Ivoire in that, in terms of bringing together initiatives, collaborating with partners, and then scaling up in this next phase of ACEA and ACEF. Now, I wanted to comment on the suggestion to have a continental blended finance mechanism. I think this is a really good idea. Some of the considerations that we will need to think about is that each country in Africa, all 54 countries, have a different risk profile. Each of them have different ways in which projects can be implemented, how that risk is priced, and how the financing can take place. So while the idea is a very good one, we would have to perhaps probably group countries together. You'd have the countries that are indebted countries that will need their own financing structure. The countries such as Seychelles, high income country, can only access certain financing structures. So there is an opportunity, and I think one of the statistics I saw recently was about the amount of money pension funds. I think in Kenya, pension funds have held up to 20% in government securities. They've maxed out their limit, the cap that they should hold in government securities. So the question is, can these pension funds, can they be encouraged to finance certain activities? So we do have a few equity vehicles that are looking at this. They're working with the pension funds and the government bodies to see how that financing can be targeted to infrastructure, to climate change, to agriculture. Now, I'd like to finish with a story of, two examples of countries where the bank is looking at these innovative options. One is Benin, and Benin is an example of a country that has, in the last 1 year or so, benefited quite significantly from developing a sustainable financing framework. So the bank started with a policy-based operation. This is a financing mechanism that helps the government put in place the right policy and regulatory framework that is required. It could be defined by the priorities of the country. If they need to put in place, regulatory options to drive private sector, if they need to put in place institutional and capacity building frameworks. So the policy-based operation finances that. Thereafter, they identified that they would need to target the international markets through a sustainability-linked bond. And so through the policy-based operation, they put in place the right regulatory framework. They also identified a green bank, a local national development bank that could be used to further the agenda of financing sustainable activities in the country. This could be the rollout of energy efficiency or even renewable energy projects. And finally, they're tying it in with a partial credit guarantee. So with a partial credit guarantee, this allows them access for the bond in the international markets and lowers the issue of the risk and the pricing for that bond. So I think that is one example that where we've seen great strides. I think other countries, Morocco has a similar structure. My second example I'd like to give is more to showcase the collaboration. And I think this ACEA annual meeting has been quite innovative in bringing together so many strategic partners and countries. The power of collaboration is really important. So in Eritrea, the bank is financing the rollout of renewable energy, mainly through solar PV. The first phase did not consider battery energy storage solutions, but in the second phase, we're now looking at it as an option because we realize that yes, solar PV is there, but you need to have the stability by rolling out the battery energy storage. Now, the phases are quite large. We're talking about 30 megawatts of power. It's small in megawatts, but when you think about the country, Eritrea, it's quite large projects. Now, they realized it was through support of UNDP, they undertook a hazardous waste management plan. And the plan identified that actually the rollout of this renewable energy is going to result in a lot of waste at the end of life. We're going to have a number of panels, we're going to have a number of batteries, and we have not thought about it from the country's perspective about how to address that. So the hazardous waste management plan was written up for the project, and has now identified the need to have a battery recycling plant. So the battery recycling plant will obviously also look at issues such as the solar PV, but it will also address elements of skills. Do we have the right skills? Are we going to develop the right skills? Can we work with other, for example, a private sector entity to come on board, finance that plant, and look at how much we can reclaim from the waste? But an important question then comes up. Eritrea is sitting at the end of the Desert to Power project, so what can we do for the other countries in the whole chain across the Sahel regions? What can we do in terms of trade of these items once you take out the usable parts from the battery and from the solar PV? How can we then trade this amongst ourselves? So this example, I think, is a really good idea of how, as countries, we can really think about circular economy from a sectoral approach, and then look at it as well from the innovative financing options. It won't just be grant-based. You can look at private sector investment. You can look at local currency financing solutions. So I hope that through these two examples, I've been able to share what the bank is doing and where perhaps opportunities could emerge coming out of this meeting. Thank you.
Thank you. I think that's a fantastic wrap-up. Thank you for your attention, and back to Chief.